Hello and welcome to this week's What's Hot. And I must admit that the only time I've used W.H. Smith over the past few years was to buy very expensive ink cartridges when no cheaper generics were available. And of course, the sachet through the airport franchise as I pretended that I was going on my holidays just to read. I was, however, very excited last October when I learned that W.H. Smith, for the first time in 30 years, was to restock vinyl. But that gimmick has obviously come too late. Now, it's not the first time that W.H. Smith has tried to find a buyer, having put the entirety of the business up for sale in 2004, some 21 years ago. It was close to clinching a deal with private equity group Permira, but that was scuppered when they failed to come to an agreement about how to fill the existing £250 million black hole in its pension fund. So let's have a look at W.H. Smith's share price chart over the past 5 years. And here's how the shares have performed over the past 3 months. And W.H. Smith has its trading update and its AGM tomorrow on January the 29th. Keep your eye on Diageo as well. Now, it has ruled out a sale of its Guinness brand and its stake in Moët Hennessy. Now, it comes amid a testing time for Diageo boss Deborah Crew, who's seen the company's shares steadily decline under her leadership over the past year and a half. In November, Diageo shares hit their lowest level since 2017. However, fresh reports suggest that it's just a matter of a potential spin-off or a sale of Guinness. It's being studied as a range of possibilities. Bloomberg reporting that the Irish stout business could be valued north of 10 billion US dollars if it looked at a possible stock market listing, Guinness overtaking Carlsberg Lager in 2022 to become the UK's most popular beer. And what the flip, that's a euphemism that many tech investors were using at the beginning of the week when China's DeepSeek AI app rattled the market. But competition is good, which has made me delve into three AI associated stocks listed in the UK and those highlighted in a recent investor blog. Those are Gen IP, Cell AI, and Sealand Capital Galaxy, the blog suggesting they deserve higher valuations given the potential size of the generative AI market in which they operate. So, Gen IP, listed on AIM at the back of 2024, its analytics services aims to help companies, research institutions, and venture funds assess and commercialize new discoveries. Share chart not showing too much reaction to this week's tech sell-off. Cell AI, meanwhile, targets the makeup and skincare market with AI technology that helps consumers select products. It's defined as your personal beauty advisor in your pocket. Cell AI's chat feature provides beauty tips and access to thousands of product offers. Now, I was a bit freaked out because I had to WhatsApp the service and I found it a little bit slow. Finally, to Sealand Capital Galaxy, it's an IT social media and technology company. It was hit hard by the tech sell-off, but look at its recent rally. So maybe the stock is just finding a balance. But the sell-off, a headache for freshly appointed chief executive, the life sciences academic, Dr. Thomas Sawyer. Now, the tech sell-off coincided with what was a big announcement for the company, that of creating a proprietary platform with Evu, a company that they've been in protracted discussions with, all to do with creating an AI platform tailored specifically for the luxury community. The platform is to be called Sivu AI Asia, aimed at the APAC region. Now, I'm not able to do a deep dive as yet on the business, as the website is a bit impenetrable and it's not a good shop window for the business. And Tom needs to update his online presence, but I wish them well. Well, I hope you're well. Take care. I'll be back same time next week.